I'm gonna do a quick daily review and expectations. So I'll start with the expectations bit. So just my what I'd want to see from tomorrow. We have this daily volume imbalance right here. Let me take all my indicators off right now. So I want to be paying attention to that. And it's pretty large, so I'll take the quadrants of that. Not crazy large, but pretty large. And then dropping down to or let me check the weekly chart too. Nothing too much. We have this wick, but I feel like that aligns pretty well with the daily volume imbalance, so I'm going to keep that on there. Dropping down to the 4-hour chart. We do have this outside down here, but because we're above all-time highs, I'd like to assume it's probably going to press higher. And we've got this range that we can take standard deviations from. We've just tapped negative 0.5 and then traded lower. So if we if we pick up speed from here, want to trade past it and use this level as support, I'd want us to get trade towards the negative 0.75 and ultimately the negative 1. But these are just like projections. I'm not gonna lie, there's no set drawn liquidity because we're above all-time highs, so it's more likely to press higher, but it can break lower. We've got a lot of sell side built up overall, and I'd like to see that get attacked, especially right here. This is really smooth. But, let's see. Let's wait for something to show itself that we're going to, flip. Right now, nothing's really there. Nothing too much of interest on the 1-hour chart. Yeah. This sell side on the 15-minute right here. That's clean. So I want to see in the daily volume imbalance when we get there, are we aggressive about expanding towards this sell side and reaching the bottom of it? Because if we are, we're kind of a little bit more likely to want to maybe get excited and take this and this low out. Or if we really want to get like crazy about it, we can run for these two lows. And I don't want to go too deep into Asia, like 5-minute and stuff. Especially because the structure is still building, so like what I'd want to see is if I get this indicator, I get Asia and central bank dealers range, and I want to see if London kill zone. So 2 to 5 New York time, and I'm on Pacific time, which is why the times are different. That's when I'd want to see ideally this low attacked. Yeah, ideally this low attacked, I'm not gonna lie, at least. And the reason is because I've already explained that it's optimal if London kill zone attacks central bank dealers range or Asia's higher low. And especially because it affects the trading after 10 a.m. Eastern time. So if it doesn't sweep the higher low of Asia or central bank dealers range, then normally after 10 a.m. there will be a little bit of a consolidation or just like difficult trading. It's like it's sloppy, it's back and forth, it's real hard to get a nice direction or like a nice trade going. So, and we also have 10 a.m. red folder news, Jolt's job openings, I think. So I want to see, I would especially want to see us have good price action after that. So that's why that kind of fits into the narrative that like London kills on. I'd really want to see it try to attack at least the sell side, the Asia low. And then if we get excited and ramp up, we can attack central bank dealers range. But honestly, I'd prefer that was left hanging. And maybe we could make an attempt to attack that during New York. This is real smooth. Right around here. And this is kind of pretty smooth too. But this is real smooth. I really like this. I'd honestly really like if we just kind of consolidated around here until New York and then broke down. Or not New York, London kills on. But honestly, I don't know, to be honest. I'd really want to see how this structure plays out. And, I'd go into New York after the 10 a.m. news, ideally. Maybe if I found a trade beforehand, like at market open. Actually, probably not market open. Maybe. But ideally, probably pre-market. If I found a real nice trade, that's when I take it. Otherwise, I'd wait for 10 a.m. news to come out, and then I'd see where things are going to go from there. I'd factor in what London Killzone did as well. And the reason I'm putting so much emphasis on post 10 a.m. as well is because on Wednesday we have the first NFP event, ADP NFP. So tomorrow, Tuesday, afternoon session is likely to be a little bit more iffy and difficult and just hard to read. And especially because the day we just had, Monday, I wouldn't consider this like a nice, easy day. This was pretty sloppy and difficult, and that's why we had this nice, clean end of day run, actually. This nice bullish run at the end of day. That's kind of the result of this like sloppy day where we kind of went nowhere. It was hard to find a run that actually went somewhere. That's on those days, that's where you'll usually see a run at the end of the day that's clean. But yeah. So I want to lean into tomorrow. At least just London Killzone with the bearish bias, because we've already attacked Asia and central bank dealers range high. So I don't think I can target that. And then from there, I want to see, does London Killzone create the low of day or something like that? That would be nice and easy to attack this buy side previous day high. And let me actually check real quick. 15 minute. There's no obvious real wick, to be honest. Besides this daily wick, I'll actually measure that out as well. This premium wick that we've just created. So I want to use these as like targets as well, or pretty much just I want to see if any of these levels like hold a significance. So like if we do want to trade down into this daily volume imbalance, we'd probably want to be sensitive around like the midpoint or maybe even the upper quadrant of this daily wick. So that might support bearishness overall. Even after London Killzone, we might want to attack the sell side. But hold on. Yeah, so I pretty much just want to watch what we do at London and and how we open up into the morning and how we go into the 10 a.m. news and how the 10 a.m. news affects the market. But I'm watching this sell side, this buy side, and this sell side for right now. I want to see what we generate overnight as well. I'll try to send that in my expectations in the morning if I'm up. But if I'm not up, just know that I'd ultimately still prefer the long, just because we're above all-time highs. It's more likely the market's going to push higher, so I don't want to like pick a top or anything. But if we get excited, I wouldn't be like opposed to seeing it trade down here at all, or even like just at least into the daily volume imbalance. I wouldn't be opposed to that. So let me just do a quick review of the day. I'm going into this a little bit raw, but let me put in my NLog and let me get the openings. And I'm not gonna put it on, but it was pretty useful to have Friday's levels as well. But let me hold on. I think this is what I used. So that's Sunday new week opening displacement. This one wasn't too obvious because the fair value gap wasn't that big, but I'd say it's probably the most likely like first displacement of the week on the 1 minute chart. And it's not too obvious, so I don't want to put too much emphasis on it. Why I keep it gray a lot of the time, but just know it's like there. That's something I'd look at still. So we start off. Let's start off with around market open. Market opens. We have this. Sorry, let me check if we actually are. We had a no news Monday today, right? Yeah, pretty much. We had some meetings going on all day, so we might have been better avoided. And honestly, it was a little bit of a difficult day, so that might have been why. But we start off, create the opening range gap, can't even touch the upper quadrant, so that signifies like we're gonna be really bullish. But what happens here is we enter a high resistance bullish, which, by the way, so this, let's just assume this buy side was the target and you knew that. You're bullish, and something that like confirmed that for you that we were going to try to reach for this buy side is like we didn't trade into this opening range gap at all, not even to the upper quadrant. That's a real bullish signature. And then we trade higher, we try to trade down into the opening range gap one more time, and then we fail to trade into the upper quadrant again, stop at the high. So that's real good signature. You can like go long here, perfect tap of NWOG, CE, and it also taps this order block right here and flips bullish. And with this order block is also in a propulsion block right here. Or this is a propulsion block inside this old order block. So that's also getting reclaimed at that moment. That could be a long. And then you see it kind of edge you right here and then retrace deep. That's already kind of a bad sign that that's probably high resistance, because any position should have been kind of built up right here. Like this went real deep. It went into the opening range gap, which if it was bullish, it would have been better that it just left it. And so it didn't need to come this deep already. This was like kind of a chance that it could have went down here into the upper quadrant of the opening range gap. So just this, like the fact that this it was deep, this is kind of like a high resistance thing, or just meaning like smart money had the ability to build up positions in here. So they kind of have like, and all this consolidation back here as well. They don't really have too much reason to consolidate it anymore, is what I'm saying. If it were really like low resistance bullish. So the fact that it's coming down right here is not a good sign. The fact that it edges you again right here is another not good sign. It comes down, retraces. And then it goes up, finally takes it, retraces again, sweeps the buy side one more time. And then we have a switch from high resistance bullish. It's a high resistance bearish. So kind of similar idea, like a sweep sell side, deep retracement, sweep sell side really, really aggressively. Fail to reach down here. Have a large retracement, which, you know, you could think it's bullish right here, but things weren't really clear in this moment. I'm not gonna lie, if I was like, I don't think I was up at this time, but if I was trading, I would have been mixed right here. But then, oh, and also let me mark out first presentation for value gap and all that. So first presentation, 9:30, right here. And then we got the 6 a.m. as well. So, I think I'm going to take this bullish one right here. This might not be the best one to take, but that's just the one that I'm going to take. I don't want to put too much emphasis on that because it's just, the levels would be only slightly off. So yeah, while we're doing that high resistance, the bodies are kind of respecting, or trying to respect, the high of this 6 a.m. first presentation. And we trade down, respect this pretty nice right here, failed to tap the high. Trade lower, still in the high resistance bearish, which it stays within. And tried taps the Sunday new week opening displacement, which I could be wrong about again, but it's pretty perfect, pretty nice. And then trades into the first presentation, fails to trade outside of it, can't even tap the high. That's a real good bearish sign right there. Because like if it closes on the high, that already tells you it's good to go lower. But the fact that it couldn't even tap the high and it's trading lower, that's a sign that we've got room to go lower. We trade lower using this fair value gap as well. I'm not going to mark it out, but this fair value gap right here. And then this volume imbalance that we've been consolidating inside of this whole time. That's the reason it's kind of mainly important. So first of all, it's the first volume imbalance of the range. You know what I'm saying? So that gives it some importance. But also the fact that, you know, all this price action, the bodies are respecting it bullishly. We've been using it as a catalyst to stay in high resistance bullish. And then now we flip it with the breakaway gap right here. And I think this is time-based as well. Yeah. 10:45 Eastern. The first fair value gap after that. Which I'm gonna mention right here. I have a concept that's just a theory that there's a significance to the first fair value gap every 15-minute interval. So you already know about the 9:30 ICT is taught. It's the first fair value gap after 9:30. And then I pay attention to the first fair value gap after 9:45, 10, 10:15, 10:30, 10:45, and so on. And then, yeah, it's not like crazy or anything. It gives you an idea of what fair value gaps to put a little bit more emphasis on, I guess. Or like, especially if there's a group of fair value gaps and you don't know which one to pick, it gives you a nice layout on like which ones to pick. Because it's usually going to be that one or the one after it. And you'll learn to study which cases which happens. But in this case, that volume imbalance that I've been looking at, explain the importance of it, we're inversing it right here inside of that fair value gap. Spend a little bit of time inside this fair value gap, but you see how it's mainly in the bottom half, and in the top half, all it's mainly doing is just sweeping out buy side. So like if I zoom in right here, the first time it's just sweeping this buy side. The second time it's just sweeping the high of the candle it first made, and then the third time it's just sweeping the second candle's high. So like it's like a triple drives pattern right there above the buy side inside the volume imbalance, or inside the fair value gap. And then we fail to tap into the fair value gap one more time right here. We tap into this order block, which isn't an optimal order block, I won't lie to you, but I think it's still one especially because it dug into the fair value gap one more time and then left it. So I'd want to consider this an order block. We tap it, flip bearish, and this is all inside this inversion fair value gap right here, which is also another time-based fair value gap. The first one after 11 Eastern. So that's what that was pretty nice. And then a quick nice run, sweeping out all this sell side, these three lows, getting aggressive, attacking this low, and this low, and then trading down deep into the opening range gap and failing to fill it, which is okay. It doesn't need to fill it, especially because it filled the NWOG in this process. So like this open NWOG from before that we left open, it filled it right here. So it did, filling the opening range gap was like final target, best case scenario, and it didn't need to deliver. So it didn't deliver because it didn't need to. It could have, but yeah, especially because it was already so extended past these lows. Whenever it sets up like super relative equal lows like this, and it attacks it super fast like this, you want to view that as suspect to go like higher again potentially, and like not even like higher in the long term like this, even just like a short-term retracement you can anticipate if we've got like all these lows set up like this. If it still manages to stay beneath them though, that's a real sign of weakness, because it's gonna try to wanna get above them, especially if they're respecting a reference point, which it wasn't super clean, but like these three, I guess, right here, or these two, were respecting NWOG CE, and then this respected org high, opening range gap high. This, I guess, did too. So the fact that all these kind of respected, it wasn't as clean, by the way, but the fact that these previously respected and then it swept all of them, you can use that as suspect to trade higher quickly. And if it starts trading higher quickly, you can try to take a long to a premium. So like, for example, there wasn't really a clean one, in my opinion, beneath these lows. Like, I don't know if I would have been confident personally, but you know, this is a fair value gap right here. You gotta include the volume imbalances, and that's beneath the last low. So that last low, we attack it with the fair value gap and come back up with the fair value gap. So that can be like Venom model, fangs, and then it's not as clean though because you want it to be a little bit faster, but you can accept it to not be insanely fast. So yeah, that could have been a long, but I'm not gonna lie, I probably would have missed that. And I think the only long I could have probably hit was when let me erase these real quick. Was when this came up. So we created the relative equal highs. So I already did, like, this is a high. Come up, barely edge it. We come down into this fair value gap right here. Sweep these lows right here. And, and filled the fair value gap close around the bottom. The bodies, we, aggressively go back up. And then the bodies try to respect midpoint right here. And we, I think, reclaim the low pretty perfectly right here. Breakaway gap from the high end of the fair value gap. And this isn't a time-based one, by the way, but it still has some significance. So yeah, you want to see this act as a breakaway gap if you're really in low resistance, which we do, and trade above this order block, creating a change in state of delivery, and then trade down into the order block and tap into this higher. So if this is a breakaway gap, ideally, optimally, not always, you know what I'm saying, you can't just see two fair value gaps and expect this, but if this is going to be a breakaway gap based on the previous logic of higher pricing, then the next fair value gap should be an institutional order flow intradrill, which this wasn't a perfect one because you don't really want to see it get filled like this, but if it's small, you can see it get filled like this with a little bit of room for error. So that I'd still consider this an institutional order flow intradrill, and this would have been a nice entry, and like the confirmation, like either this could have been an entry if you were confident, and if you weren't confident, you could have waited for the confirmation where it tapped into it, and then this candle flipped bullish, and we were really aggressive about sweeping the previous candle's high. Then, like, especially in this candle, the fact that we tapped the fair value gap and then immediately ran for this high, that tells me everything's set and good to go. We're ready to run. So that would have been a nice run for this high. And yeah, maybe even this high if you expected it to get excited past all these highs, because it edged it right here again. And this is all inside current first presentation. So if you see a lot of consolidation around there, and especially if it attacks midpoint and it's already kind of worked the area a lot when it's a reference point, as soon as it attacks midpoint, you want to assume it's probably going to try to trade to the high. So that could have been a nice setup. And yeah, but that wasn't, that was pretty much just like a little scalp of the day, not even like barely 20 points, and that's if you got like perfect fills, you know what I'm saying? So this was definitely a difficult day, really hard to get trades out. And then let me just get to my trade, and then I'm pretty much just gonna head off because I gotta attend to something. But my trade was around right here. So pretty much my expectation was I saw how this entire day was very struggling to have like a sustained price run, as ICT calls it, where it's like just a run in one direction, and it's willing to go quick and like far, and like kind of just a sustained run, you know what I'm saying? This was the only side of that, this run lower. But then it didn't really like, it's just kind of like a trap, you know what I'm saying? This was kind of an extended price run, and like I don't want to consider this a sustained price run. It was more like an extended price run. Yeah, so especially because it came right back into the range again, like I would assume that, yeah, we've been in like a consolidation all day. There's been no sustained price run, so I would assume the end of day macro is gonna allow for some sort of, opportunity for it to finally spool. So the direction, how I determined it was, there was kind of a lot of ways, and there was some old first presentation logic as well, but I'll mainly share the ones I had most interest in today, which was if we take the current opening range at 9:30, so the highest high and lowest low between 9:30 and 10 o'clock, which, by the way, right here, that same short earlier, right from midpoint. So that was another clean thing, using the opening range concept. And traded right down into negative 0.5, which I mentioned is always a nice area for a partial. And also the negative 0.25. But by the way, the negative 0.5 would have been a little bit more logical to expect it to trade to. Even though this is still a good partial, just because this is beneath where the NWOG would get filled. So the NWOG doesn't get filled up here, the org is still unfilled up here. So it's still logical to expect it to want to maybe trade lower. That's why this is a little bit better. But yeah, we trade down, and then we trade higher from the negative 0.5. And excuse me. And the opening range, again, we refer right back to the upper quadrant right here, and the move gets deferred, and we start trading lower in a high resistance. So I'm waiting for a signature that we're going to leave this, and also I'm waiting for the time that we're likely to leave this. So the time I've already determined is going to be end of day. And the signature, I guess I'm still looking for. You know what I'm saying? Like, and I don't know which direction still. I haven't gotten to that yet. But I'm noticing how we're trading down in a high resistance. So we've gone up in a low resistance bullish. And you can consider this like one high resistance signature, but that's normal. And then now we're going down in high resistance bearish. So it's kind of like the two possibilities are it's going to go low resistance bearish or low resistance bullish. And the idea is I can expect it to be in low resistance bullish. First of all, because of high time frame bias. So we're above all-time highs. I want to expect it to want to try to press higher. You know what I'm saying? And we've already gone down for the day. So if it were to press higher, like now would be the time. Especially because the whole day it was kind of like, it felt like longs getting grinded out. To me, this is what that looks like, because it kept like kind of grinding lower slowly, giving longs hope, like right here, this going higher. They were probably real happy, and then they saw it grind lower slowly, and then they might have taken their stop down here, and then finally it went higher and attacked the buy side up here. So that was kind of another idea to me, that like kind of what was going on like this whole time is we're making sell side jagged. So like we keep sweeping sell side, keep sweeping sell side, keep sweeping sell side, and we're leaving all this buy side. Like, yeah, we sweep it once right here, but we're leaving most of it in general. Like, yeah, we made some parts jagged, but there's still a lot of buy side hanging. Like, it's a lot more clean rather than compared to the sell side. So that was another thing I was looking at. Another thing I was looking at was I was paying attention to still the opening range, the standard deviations of that, and I can see we're still respecting the negative 0.5. We've reclaimed that, and we're not willing to trade below that and trade beneath this sell side to fill the opening range gap. Bodies are staying above the lower quadrant, and then right here they're actually respecting the low of the NWOG as well. And what's it called? I also want to mention this new concept, or this new theory that I'm just working on right now, just to put it out there real quick. I think the range between 10 to 12. Yeah, 10 to 12 Eastern. The highest high and the lowest low. That range, I'm pretty sure holds an importance, but I could be wrong. That's just a theory that I'm working on right now. Nothing important, really, to be honest. Or nothing solid, I guess. I don't have too much study with it. But I pretty much I watch the quadrants and see how price reacts off of them. So, like, if I for example, I was bullish right here, and if I expected bullishness, then I want to see us in the lower quadrant. If we're in a deep discount, I want to see us kind of consolidate around here, and I want to see them use this area to build their positions, which we did a lot. Honestly, this was a little more than I wanted and expected, but it wasn't time yet, so I had to allow for it. So yeah, and later on, we honestly not much. We didn't use it too much. We used it earlier on. That was pretty much all. And then we also have the PM range, which is from 1:30 to 2. So the highest high and lowest low between those two times. Alright, I want to take standard deviations of that as well. And I see for the same negative 0.5, where the bodies are closing right on it, we're failing to reach the negative 0.75, which is telling me it's not super close. It is pretty close, I'm not gonna lie. So that's telling me that if we want to trade higher, we're or how do I want to say this? If we want to switch to like a buy program, we're gonna attack buy side pretty quickly. And so that kind of also fit into my narrative that end of day macro, we've had a real tough trading day, so we might want to trade higher real quickly at the end of day, providing that nice low resistance liquidity run, all towards that clean buy side setup. And so yeah, we use that negative 0.5 and then end up later on reclaiming that negative 0.25 right here, and this is around where I got my entry, or I got my entry a little bit later than this, because what I was looking at was so first of all, I noticed that the bodies were respecting the opening range gap midpoint right here, and then we closed past it, or sweep the sell side right here, and then immediately trade back up quickly. So that was kind of an interest of mine, that hey, it looks like this might be a point that we might want to go higher from, unless we're in high resistance, unless we want to stay in high resistance, because we've kind of already been in it. So if we were to leave low resistance, I'd want this low to be left intact. But if we were to stay in high resistance, then this low would be attacked and we'd still go higher. And then so this low, we kind of leave it intact. We leave this for value gap right here. And I want to see that. I really want to see this for value gap hold up. Otherwise, the whole trade idea is kind of cooked. And I'd either look for some other signature to show up, or I'd look for a different trade idea. Maybe I was wrong about the longs and maybe it was going to break down. And trade to the low of the opening range gap, maybe to negative 0.75 and negative 1 of opening range. And then PM range as well, we have the projections. But we end up right here. What we end up doing is we respect the low of both the PM range and the consequent encroachment of this fair value gap pretty perfectly. And then while we're doing that, we tap it 2-3 times, and I take that as a long, because these are important reference points. Mainly the fair value gap, it has a time-based aspect to it, but it's mainly because it was aligned with the PM range low. That was what's really interesting to me. And so yeah, when we had those perfect taps right around here, and the bodies were respecting this, the low of this fair value gap, plus we were if you watch that live stream I shared with you, this is that logic that ICT shared. So if we sweep a sell side, and then the bodies show the narrative that we're likely to stay higher, we the bodies stay above the sell side, and then we're quick to reach for premium inefficiencies right here. So already this one earlier, so we have this one. Are we quick to trade to the high end of that, the extremes of that? Yes. Do we trade into the next inefficiency? Yes. The next inefficiency, isn't that an inversion fair value gap now? Yes. So, this wasn't, okay, wait, no, sorry. Also, my bad, I misspoke earlier. This was pretty much where the long was solidified in my head. But this is where I ended up getting my entry, I'm pretty sure. But, yeah, where was I? So, yeah, this fair value gap, we have the paint rolled over it. We trade to the low end of it. And then the bodies start respecting the midpoint. So that was a real nice signature right there for a long, and that's also especially because it lined up with PM low. And then I have to allow for it to sweep all this liquidity right here, which it does, because we tapped it a couple times. You know what I'm saying? Like, it just set up, like, even though it was acting like a brick wall, which is good, it set up relative equal lows. And I have to accept that those are willing to be swept. Or like those have the potential to be swept. And then we get it all excited enough to travel like beneath it and sweep this low as well, but the bodies are still respecting the fair value gap, so everything's still in play. Get above the fair value gap, trade down into it, bodies respect midpoint. Good signature right there. Trade above. Create order block that tapped into the fair value gap. Trade into it, flip bullish. Inversion fair value gap. Order block right here. We don't trade into it and flip bullish, but like we close right on the high of it, which is kind of like still really nice respect. And then tap the inversion fair value gap one more time. Plus also if you watch the ICT live stream again, this volume imbalance again. So the fact that this, one of the weakest PD arrays, the volume imbalance, the fact that it's holding up so well, like we're tapping it pretty perfectly, like we traded beneath it by like one tick, and that's fine. The fact that we're tapping it and having this kind of like strong of a reaction already, and the bodies are trying to respect the high of this order block, like that tells me that the market is as strong as I want it to be right now. And then it's confirmed when we have this quick leg up, this jump up, create this fair value gap right here, which honestly I want to see as a breakaway, because this is my expected breakaway from high resistance to low resistance. So like the logic is high resistance. I was mentioning earlier, I said it a little bit wrong, but high resistance bearish. So it was low resistance bullish, high resistance bearish. And then I can expect a low resistance bullish run. But if we're also going to have a case where we want to spend some time consolidating to build positions, which is usually going to happen if we're in the right place at the wrong time. Or even if we're at the right place at the right time, like if it's just they want to build their positions there, they just want to make it difficult, there's nothing you can do about that. You gotta accept that it's gonna be a little bit more difficult to read, and that you gotta be a little more generous with your stop loss if you're in a trade, or like where you allow it to go. You gotta add like another confluence, I guess, or something. But yeah, low resistance bullish, high resistance bearish. And the main interest to me is high resistance bearish, high resistance bullish, which I guess this isn't that obvious of a high resistance bullish, but it's still a high resistance bullish. And then low resistance bullish. And then this was my kind of confirmation, what I was mentioning earlier, this fair value gap back here was my confirmation that yes, we're for sure. So my entry was a little bit before it, and it was a little bit, I'd say, risky, to be honest, because it was in the upper quadrant of the PM range, I'm pretty sure, and it aligned with something else. Honestly, I don't want to go back and check it out right now, but it was a little bit more risky the long I took. But then when I saw this, I knew I had, like, I was completely confident, because it created this displacement, especially because it came down, perfectly tapped, opening range gap high, plus, well, I guess that's also going to be, 9:30 open. And, yeah, immediately started trading higher, quickly. And then we have all this buy side, sweep it all out. And then I targeted, we have this buy side right here, which would have been a nice target. But I went to, like, the 15-minute and targeted this, like, a wick that was encompassed by, like, this price action or something like that. I don't want to go back and check, I'm not going to lie, but it was like a 15-minute or 1 hour wick. You can just take my word for it and check. You can either take my word for it or you can go check. But, yeah, I targeted the consequent encouragement of that. And, yeah. My bad if I was a little bit confusing today. I'm a little bit tired. But, yeah, let me know if you have any questions. Later.